There's some big changes to Canadian taxes for 2024, and this will affect all of us. Hey guys, it's Adrian here, the Canadian in a t-shirt, and today I'll break down important tax changes in Canada for 2024 that you need to know. This past year was rough, with continuing inflation and rising interest rates. But for the new year, we've got some good news. For everyday Canadians, we'll see an overall reduction in taxes, so you can keep more money in your pocket. I'll cover new limits for the TFSA, RRSP, FHSA, big changes to the CPP, Canada Pension Plan, updated tax brackets and tax credits, and I'll end off with a step-by-step example tying it all together. Feel free to use the timestamps to skip ahead. We've got a lot to cover, so let's jump in. Starting with some great news. The TFSA contribution limit for 2024 has increased to $7,000. This is the first time we've seen a TFSA increase 2 years in a row. That's amazing. So for 2024, we get an extra $500 that you can contribute to your TFSA and watch those investments grow tax-free year after year. The TFSA is one of the most powerful tools we have as Canadians to build long-term wealth. So please use it the right way. I've already made several videos on how to get the most out of your TFSA. Check those out. I can't stress enough how important a TFSA is to build your financial future. There are no downsides to a TFSA. It can't hurt you, it can only help. So on January 1st, 2024, everybody will gain an additional $7,000 worth of TFSA room. You can put in $7,000 on New Year's Day, but if you don't have the money, don't worry, you don't lose it. That contribution room is carried forward forever. And if you don't have cash, you can transfer over stocks and ETFs from your non-registered account into your TFSA. Just a heads up, you might have to pay some capital gains tax on that transfer. Even so, a one-time tax is well worth a lifetime of tax-free growth. Watch this video for all the details. Everyone in Canada gets the same TFSA room. It only depends on your age, not your income. Use this table to find the maximum TFSA room you have based on your age in the year 2024. If you were born in the year 1991 or earlier, meaning you will be 33 or older this year, you have a total of $95,000 of TFSA contribution room. That means if you have never added money into your TFSA, you can put this full amount, $95,000, into your TFSA. Looking at the bottom, if you were born in 2006, meaning you were turning 18 in 2024, you will have $7,000 worth of TFSA room. And for new Canadians, this is important. You do not need to be a Canadian citizen or even a permanent resident. As long as you live in Canada and have a valid social insurance number, you can open a TFSA and start investing. However, you only start building TFSA room once you actually live in Canada and are at least 18 years old. So use this table to see your TFSA room based on when you moved here. If you're 40 years old, but you only moved to Canada in 2023, you don't get the full $95,000 of TFSA room. You would only have $13,500 of room, the same as a 19-year-old. You earned $6,500 of room in 2023 when you moved here, and another $7,000 for 2024. For the RRSP, we also have increased contribution limits for 2024. The RRSP is a powerful investing tool to build your retirement fund and reduce your tax bill, but your contribution room does depend on your income. Each year, your RRSP room will grow by 18% of your earned income for the previous year. Earned income includes your regular employment income from your job, plus your net business income and rental income if you're a landlord. But it does not include investment income, like dividends and capital gains. So if you have a salary of $80,000 at your job, you'll earn 18% of that, or $14,400 worth of RRSP room. But this 18% of new room is capped at an annual limit. In 2023, this limit was $30,780. So if you had a massive salary of $200,000, you wouldn't get the full 18% of that in RRSP room. You would be capped at that limit, $30,780. But good news for high earners. In 2024, that annual limit has been increased to $31,560. So if you make over $170K, you get to enjoy that extra RRSP room and reduce your taxes. Watch my RRSP explained videos to learn how it all works. There are a lot of rules, but don't let that stop you. The RRSP can be an absolute game changer if you know how to use it right. One of the best things in 2023 was the FHSA, the First Home Savings Account. It's there to help Canadians buy their first home, and it combines the best benefits of both the TFSA and the RRSP. All the money you put into the FHSA is tax deductible. It lowers your tax bill just like the RRSP, and that money is invested and eventually withdrawn tax-free, like the TFSA. It's a total game changer, so please take advantage of it. There's no changes for 2024. You get the same annual contribution limit of $8,000, but this is important. You only build that room if you actually open an account. Make sure you open an FHSA before December 31st, even if you don't put any money in. That unused room, $8,000 for 2023, will be carried forward, so in 2024, you'll have a total of $16,000 in FHSA room. If you wait until January to open your account, you miss out. You'll only be able to contribute $8,000 for the year. I show you how to open an account step by step with all the rules and benefits in my FHSA Explained video right here. I'll include links to all these videos down below, plus referral links to open all these investing accounts with Questrade, my favorite platform. One of the biggest changes for 2024 is the CPP, the Canada Pension Plan. The CPP is a retirement plan that all Canadians pay into, except for Quebec. Just like our taxes, the CPP is deducted out of our paycheck, and sadly, this amount is increasing. Starting January 1st, the maximum CPP contributions will increase, and this is new. For 2024, there will now be a secondary tier for higher incomes. Here's the bottom line. If you make less than $66,000, your CPP contributions won't change. You're going to pay the same amount as you did in 2023. But if you have a higher income above $73,200, you're going to pay an extra $300 in CPP this year. That's an extra $12 from every paycheck, so be prepared. Again, if you make more than $73,200, you will contribute the maximum amount to CPP, $4,055. And if you're self-employed running a business, you have to pay double, your portion and your employer's portion. I already made an entire video on these changes to CPP about 2 weeks ago. I go through all the math with examples, so please give it a watch. Back to the good news. For 2024, the federal tax brackets have been adjusted, so everyone will pay a little less in federal taxes. As I covered in this video, How Taxes Work in Canada, we have tax brackets that start at the bottom and build on top of each other. So your first $55,000 of income is taxed at the lowest rate of 50%. Then your next $55K is taxed at the second bracket, 20.5%. Then the next bracket is 26%, and so on. In this way, lower income Canadians pay less in taxes as a percentage than higher income earners. For 2024, the tax rates are the same, but the brackets themselves have grown by 4.7%. That's a good thing. Now, more of your income will fall in the lower tax brackets, and so you'll be paying that lower tax rate, and this will help all Canadians. Specifically, the lowest tax bracket of 15% has been increased by $2,500, so now your first $55,867 will be taxed at this lowest rate. The second tax bracket of 20.5% has been increased by $5,000, so now any income above $55K but below $111K will be taxed at 20.5%. The third tax bracket has been increased by almost $8,000, and so on. Across the board, all Canadians will see more money in the lower brackets, and so you can expect a lower tax bill overall. Note, this is only for federal taxes. Each province also has their own provincial tax brackets. Stay tuned till the end. I'll go through these brackets and calculations step by step with an example. To further reduce your tax bill, a lot of tax credits are also getting a boost this year. The most important credit is the basic personal tax amount, which helps all Canadians. For 2024, the basic personal tax amount will grow to $15,705. This is designed so that if you earn less than $15,700 a year, you won't pay a single dollar in federal taxes. This is especially helpful for students and part-time workers. For everyone else, you receive a tax credit, so you don't get taxed for $15,700 in that first tax bracket. Remember, the first bracket has a tax rate of 15%, so you'll save 15% of $15,705. That saves you $2,355 in federal taxes, and all Canadians benefit from this. Compared to 2023, we get to keep an extra $105 in our pocket thanks to this credit. However, if you're in the second highest tax bracket, you earn more than $173,000, your tax credit gets clawed back as your income grows. But don't worry, this credit won't go down by much. Even if you're in the highest tax bracket, making above $246,000, you'll still receive the minimum tax credit of $14,156. But for the vast majority of Canadians who make less than $173K, you get the full credit, saving you $2,355 in federal taxes. Another significant increase we see for 2024 is the Lifetime Capital Gains Exemption, which gets a big bump up to $1,016,836. This tax benefit isn't for most people. It only helps Canadians who own a small business corporation and are selling their business. It also applies to farms and fishing properties. For example, I own a corporation, and if I sold this company for $1 million, I would be taxed on that million in capital gains. it would cost me over $220,000. Ouch. But with this exemption, I get to reduce my taxable gains by $1,016,000. That effectively wipes away my entire tax bill. This is a huge benefit of starting a business in Canada. You can eventually sell that business, and that sale is extremely tax efficient. Note, this is a simplified example. In reality, there's something called the alternative minimum tax, which targets extremely high income earners, so that you can't sell a $1 million business and get away with zero taxes. The calculation is way too complicated for this video, but using my example, you'd pay around $30,000 in taxes. Still a great deal on a $1 million sale. I know I threw a lot of numbers at you. Some things are going up, some things are going down. So what's the bottom line? Will I have more money in my pocket this year? Let's go through an example to work it out. Let's say I earn $80,000 a year in 2023. I fill up the first tax bracket of $53,359. Whatever's left of my salary goes into the second tax bracket, so $26,641. The first bracket, $53K, gets taxed at 15%, so I pay $8,003. The second bracket, the $26K, gets taxed at 20.5%. That's $5,461. Adding both brackets together, my total tax bill in 2023 is $13,464. Note, this is just the federal taxes. You also pay provincial taxes. Those depend on where you live. Let's compare to 2024 with the same salary of $80K. Once again, I fill up the lowest tax bracket, which has grown to $55,867 in 2024. That's a good thing. More of my income gets taxed in the lower tax bracket, so a smaller amount, now only $24,133, gets taxed in the higher bracket. Again, 15% in bracket 1 gives me $8,380, and 20.5% in bracket 2 gives me $4,947. Adding them up, I get a total federal tax bill of $13,327 in 2024. So for the same salary, my taxes dropped by $137. That's just the federal tax. We also add in the provincial tax. If you work in Ontario with $80K, similar story. We'll end up with about $90 in tax savings. Also factor in the basic personal amount that reduces taxes for all Canadians. Remember, for 2024, this saves us an extra $105 at the federal level and $27 at the provincial level. Adding this all up, we can expect tax savings of $360. So yes, our taxes have gone down, but CPP has gone up. Since our $80K income is above the CPP maximum pensionable earnings of $73,200, we'll pay the max CPP amount this year, which is increased by $300. So in 2024, we save $360 in taxes, but we pay $300 more in CPP. So in the end, we expect a slight increase in our take-home pay, especially if you have more tax credits and deductions, but we'll see the real numbers in January. If you have a smaller income, say $66,000, you won't see any increase to your CPP, but you'll get the exact same tax savings of $360. That's because you're in the same tax bracket, whether you make $80K or $66K. Make sure you watch the rest of my Canadian tax guide, my videos with the silver colored thumbnails, to learn more tax saving strategies. I know taxes aren't the most exciting thing out there, but it's so important to learn the rules so you can make the most of your money. Thanks everyone, and I'll see you guys on the next episode of The Canadian in a T-Shirt. Bye guys.